Good morning, everyone. It's Steve Braconi with Team Braconi, here again with my faithful Alfredo Vastola, team manager of Team Braconi. And excuse my voice, I was at a soccer tournament all weekend with the kids and my family, screaming like a crazy parent. So we had a good time. But today we'll do some market updates and a couple things that came across my desk with some attitude and some reflections on the way that perceiving things and how I realized that I do some of these things in my day-to-day life, and I think it might help some of the agents and clients alike. So with that
Definitely.
said, I know you put a lot of this together, Alfred. I appreciate it. We were going to dive into
Just kind of give a little update of where we're at in the market because, like I was just discussing with you, a lot of the data that you might see is lagging. In other words, it's January, February, March numbers, and here we are in June coming up very soon, and what you see in a report is going to be information that's a little bit stale right now, and especially the way things are moving so quickly, things are changing so quickly, rates are changing so quickly that some of the data may not reflect where we are today. So first thing is kind of which a lot of people are in this situation, the rental market. Um, you know, where do you see that market going, or where do you currently see where it is today? Uh, from everything I'm seeing, it was red hot. We know for months it was red hot. I mean, there was multiple offers on rental properties. I've from my anecdotal experience, I've seen that cool off a bit, although it's still pretty strong. It just hasn't been to the level where we've seen for the past 8 to 9 months prior. I want to get some of your opinion on that. The number that the data that's out now reflects it's still pretty strong, but I do see that being pulled back a bit, and it's probably because of inventory. A lot of these rental buildings, these large rental buildings, I think maybe are a little oversaturated in some markets.
sure. I'm not heavily involved in the rental market anymore. Obviously, a lot of the agents help me out with that, but from what I've seen recently, we're having perhaps less overall applications, but what I'm seeing with the applications is they're very strong. These are a lot of times people that maybe capitalized on the market being high and have sold the property and are looking for
Yeah.
something to rent until things maybe stabilize or pull back, which a lot of the forecasts are showing that's possible. So they have good credit, they have good income, they have substantial savings because they've sold something and built equity, which is kind of nice. So, traditionally we might see 3, 4, 5 applications on a rental that's reasonably priced, and I might be seeing less applications, but especially in the last month or two, what I'm finding is the first or second application is extremely strong. We run everything. We run backgrounds and we verify documents
Yeah.
and whatnot. So we run it through the ringer, so to speak, and they're coming back really strong. So I think that the quality of the tenant or prospective tenant is greater than arguably I've ever seen in 2 decades. The
That's
applications overall are a little bit down.
that's a very good point, because that's exactly what's happening. I think too is I actually had a conversation with a client last night, and she, for months, we've had a listing agreement in place to sell her property, and it was on hold. It was on hold, and she just decided, you know what, I'm just going to be a renter for for a period of time, and I'm not going to stress out about selling and buying. And I think that's where a lot of people are, because we have no inventory. We're at all time. We'll get to that later, but we're at all time low levels of how new listings. So to your point, there might be tons of people who are just like, I am not going to get involved in. I can easily sell my property. There's no inventory, no problem. Do I want to get into that rat race of finding a place,
Right,
and
and
then
it
that
was it
pressure?
was it was more difficult a few months ago.
Yeah,
A few months ago, clients would come to us and say, "Well, I'll just rent for a little while," and we had to caution them a bit and say, the inventory on the rental side is also very low.
yeah, it was. Yeah,
So what's happened, because there are less applications, like I said, even though they're strong, we are seeing some more inventory, at least I have, on the market on the rental side, which is a nice option. So
mm-hmm.
people have that safety net, even if they want to, possibly buy. Now they have another option
Yeah,
behind them if they can't find exactly what they want, typically in that short window of time between when they've accepted an offer on their sale and they're waiting for those proceeds. They have options with the rental as
yeah.
well.
It's like a nice safety net that's there, which is helpful, because it's obviously been a difficult time for some sellers who are in that little window of time where they need to make a decision.
Absolutely. And on the sales side, so shifting gears a little bit, we've seen inventory remains low, and we were just discussing before we went on, um, the listing agents a lot of times still are, in my opinion, pricing things a bit lower than they probably will go for it, which is, I believe, a smart tactic on their part because the buyer volume remains high. And if you price things aggressively, by nature, you're going to have more prospective buyers go through that property, which
Mhm.
brings offers,
Mhm.
and offers bring bidding situations. And when you have multiple bids on one property, typically you go at or over asking price, and that's what ultimately defines market value. So I think that they're doing that extremely smart, they being the listing agents.
Yep.
So we haven't seen listing prices go up astronomically or through the roof, but we're starting to see, or continuing to see, uh, offers well over asking price.
Maybe that could be a function of precaution. Advising the client, that the seller, that you know with the rates being higher, do you want to, and you often say this, do you want to be, the highest priced in a market, or, kind of right in the middle, and it's going to garner the most attention for your property.
Yeah, and seasonally, we're entering soon to be summer months. So people that have children want to get them in the school systems, lock in their property, and most people, they end up traveling a little bit.
Yep.
4th of July, August, we call the dog days of summer. People are kind of at the beach. It's 90 degrees. It's humid. A lot of people hold their search off. So if a seller is serious about selling a property now, it's very advantageous to price it correctly, and actually err on the side a lot of times of being aggressive, so that they get a lot of buyer volume through, and then those offers bid up, and ultimately a lot of times you will get more for that property in the end.
Right. Yeah, because especially if we're talking about the single family market, where now you have that window of time, that time crunch of, we need to find a place. So when emotions involved, and it's not just strictly an investment, like we've talked about prior podcasts, it's more of you have an emotional purchase. Am I going to go 10, 15,000, 20,000 more? Does it secure a place for my family? Don't have to stress about that anymore? We're competing with a couple other people. Sure, I'm going to do that, versus a strictly an investment, numbers of like a multifamily property.
Totally agree. And different price points are different. That kind of leads us into our next segment that you had for a bullet point with the luxury market. The luxury market, and I'm going to define that in our area as probably north or above $2 million.
Yeah.
That's probably, you get some luxury homes certainly lower than that. But where I see the market shifting as far as buyer volume and multiple bids and things going pretty quickly off market is above 2 million. And once you go above 3, we have one at 4 million right now. There's just less buyers by nature, in any market. But as the market starts to shift, interest rates went up, people are borrowing against other funds sometimes in those price points. They're pretty savvy with finance. A lot of people are kind of holding off. And I find that buyers in that luxury market, 2 million, 3 million, 5 million, 10 million, they want what they want, in the sense that now they've got to buy a property or they want a property that's 12,000 square feet, 15,000 square feet. So the cost of renovating that to their specific needs, even if we find it nice, a lot of times those buyers, they want what they want.
Yeah.
And so they want to go in there, and they're associating that cost of that much square footage being redone. So you're not talking about a 1-bedroom condo or a smaller 3-bedroom home, maybe 2,000 square feet, 3,000 square feet. You're talking 15,000 square feet. It's a much, much larger, even just to paint. It's 6 figures.
Significant.
So you're talking a lot more money and capital to be involved. And a lot of times, in my experience, those buyers, right or wrong, will start deducting what they want to put in that home and get it back to where they feel it should be.
Right.
So that oftentimes has, in my experience, softened the market a little bit, because those sellers a lot of times don't have to sell.
Yeah.
They want to sell, but they're also in a financial position that they can hold.
Yeah.
So the dynamic of that seller and that buyer is significantly different, in my experience, than when you go to more affordable price points, more activity, more buyers, sellers there. They usually want to buy something else. They need proceeds selling this property to buy something else. They're not downsizing. Maybe they're upsizing. It could be a number of things, but there's more drive to get the transaction done.
Yeah, there's very little drive in the luxury market, it seems. And to your point, they're kind of looking at comps as much as you can in the luxury market, which is a little more difficult, and already deducting what they're going to be putting into it. So that's how I've seen them approach their offers as well. So that's interesting. One thing we were talking about before is and we'll hop off of it real quick, but the medium sold price of homes versus, and almost nobody kind of looks at this because, as you said, it really depends on the strategy of the agent listing the property. But medium sold price versus median list price, I think personally, it can give you an indication of where most agents think the market is going. If the market's super strong, they may look at comps, but the comps, remember, 2 years ago, it was moving so quickly that you could do a comp, look at your three best comps and price it there, and it'll still go over. And I don't think we're there anymore at this point.
That and the three most recent comps were oftentimes the highest. It was literally going so quick that 2 months ago, closings were closing for a different amount than they were at that moment, which was crazy to see. Every week, every month, comps consistently went up. Very rare was there a dip of even one unit, even one home. They were all rising. Because again, that same buyer pool was still out there. When there was 20 offers, 30 offers on a property, you still have over a dozen, 2 dozen buyers ready for the next property that's similar. And now they realize I lost that other property because people were willing to pay more. And the market keeps going up, so I don't want to lose this opportunity.
Right. So I think that's kind of what I was getting at, was if we looked at data sets for that year ago, 2 years ago, we'd probably see where the list price were consistently above the current medium sale price, and now it's probably pretty even, maybe, because I think they are listing it more aggressive.
Absolutely.
So another thing is, which is you and I have kind of discussed this, and we have varying opinions, but time will tell. The U.S. mortgage delinquency rate is at an all-time low. In fact, it hit just 2.6 in March. So, in other words, the amount of people filing for or the amount of people behind on their mortgage is extremely low.
I think it went up a little bit since then. I saw an article recently, but it is still still low.
This was March.
When you have tremendous equity in homes, we agree on that. The probability of defaulting is next to nothing, because you could walk away or sell it quickly and still take money out. So you're not going to default most likely on your current mortgage.
Yeah, it's actually 42% of homes do not have a mortgage, which I looked at that and I was pretty surprised. But also looking back at the last 4 decades, homes have appreciated significantly, and we'll actually get to that later. But it in the last 30% is the lowest appreciation over a 10-year period in the last 4 decades. So you have a mixture of things there. To your point, some of those could be vacation homes, and people will quickly part with those. That may open up inventory in those markets, but nobody's going to be buying those homes if depending on.
I'd be curious to know too, what percent of the 42% are people that have paid off mortgages over time versus people that paid cash up front.
Yeah,
I think that might be a percent as people are kept in these properties. To your point, there's so much equity in them now. They were able to pay these off over time. I'm gonna
maybe do some more research and see if we can get a better breakdown of maybe it's just a survey, but of that 42%, how much of it is secondary homes, how much of it is more recent, like you said, cash purchases. People, when we had the urban flight, we had a lot of people just selling 2 families in Bed-Stuy or in places in like Queens and other areas in New York where their homes appreciated significantly.
And your second point, which is just crazy, is 85% of the current mortgages are below a 6% fixed.
Yeah,
I was speaking to someone yesterday. We belong to a club in town, and he came up. I haven't seen him since last summer, and he said that he bought a home down the shore. And he did it, I guess, a couple of years ago. And he said, now I have crazy equity, but that's not why I bought it. I bought it. It was in Lavalette. I bought it because it was 2.8% or 2.9%. And I said, I'm going to take advantage of this. This is crazy. This money is almost free money.
Yeah.
So his thought was, I'm just going to get into this, take some money out of a money market or wherever the hell he had it, and put it into real estate. In the meantime, we know what those properties have done. A lot of them have doubled in value.
Yes.
So he's in a good spot. But he said that wasn't my purpose. Now we love the home. I wasn't even crazy about going down to the beach there, and now we love it, and everything around me is just doubled in value.
Tremendous. That's some of the wealthiest regions of New Jersey for sure. Some of those mediums home prices are $1 million, like starting. And some of those
the lots are $1 million, $2 million, $4 million there now.
Some of those towns are very small. I mean, some of these towns are 1,000, 2,000 people. But yeah, very, very expensive. And as we were talking about, that could be a market down the road that takes a pretty significant hit, because when you're looking at freeing up some assets and you have a secondary home and things, maybe you lost your job, that's going to be $1 million, whatever the pricing is at that point, $1 million of cash, or even if it's half of it's financed, it's $500,000 of cash that you can free up. So that'll be interesting to keep track of that market, because I think obviously the primary home market where you're living day to day, if you have significant equity in it, even if you lose your job, hopefully you can sustain it. And
he was saying he put, I think it was 25% down, an investment property, a second home. And he said, so I financed 75%, but the property's more than doubled.
Yep.
So the return on investment of the cash that I put in, which was 25% not cash. If you put in cash, he would have doubled his money, right?
Yep.
But the fact that he only put in 25%, his perception of that math is it's 10 times or whatever it would come out to, which is crazy.
And a super low interest rate. It's amazing.
Yeah.
So it's kind of the good and bad of those low rates. But right now, in this year, 2023, it looks like obviously we're still going to be trending in the direction of super low inventory for new listings, at least. We need to.
I think the summer will tell a lot. The summer, if people still put some homes on, which typically they hold off a lot of times, they're going to hold off until buyers are back, typically in the fall. But if they continue to put homes on, there's a chance finally we could see some inventory rise, the days on the market start to build up, and then that would create opportunities that buyers could then maybe not have multiple bids, maybe secure something a little bit without a little bit more time to go through the process versus what we're doing now, which is trying to get that offer as quick as possible, trying to waive those contingencies, just trying to be competitive.
Yeah, I kind of feel like with the Fed, and maybe you can have some input on this too, like it's the way I look, it's almost like they're spinning multiple plates. Okay, we got the rates higher, but now there's no inventory, so that plate stops, and they're just trying to figure out a balance where they get all the plates spinning. And that's kind of where we are now, because I've been saying this for a while, and I could be wrong, but I think an unintended consequence of them raising the rates so quickly, obviously there's no direct correlation with their Fed rate and mortgage rates, but they do play off each other quite a bit. I felt like the unintended consequences, they didn't realize that people going from 2% or 3% interest rates to now 6%, that other people who would otherwise move are not going to move. So they looked at that, saying we need to get the rates up so we can balance the market, but people just held in place. They didn't move. And then you have super low inventory, and you had the buyers who did need to buy, and then they still drove up. But we're still seeing for the second month in a row, home prices went up slightly, but they went up.
Yeah.
So I just wanted to get your thought on that, because that's kind of something that I've been contemplating.
Yeah, no, I agree. I think that, that's exactly what the Feds are doing. They're trying to find a balance, and we don't know exactly where that balance will fall. And a lot of it becomes on, the seasons. A lot of it becomes on, the buyer volume going up and down. When that's the other thing we've seen our phones just be constant with buyers, and then it does drop off. And part of that we are trying to figure out, is that because there's not much to call on because inventory is low, or is that because buyers are holding off because now the rates are affecting what they could have afforded a few months ago? So there's different factors involved, but it is definitely a wavy sea, so to speak, where buyer volume's up and it's down, and inventory's just been down.
Yeah.
So inventory rises, it's going to be a different story.
Absolutely. But if we can get the one chart up, number 5, I just wanted to show how for the past, I'd mentioned this before, but for the past 4 decades rather, and 2023 is even even more rapidly increasing.
Yeah.
You know, you put money in a property over the 120 months, which is a decade, it went up minimum 30%. That was the 90s. It was a 30%. That occurred later. If you look at that chart, it actually ended up occurring more rapidly towards the last portion of that decade. But then, we had the housing crash of the 2000s. You still had a 50%, over the 10-year period, even in that housing market where there was the worst of all time.
Yeah.
And then now the 2020s, it already surpassed 40%, and that was just 30 months into this decade. So just goes to show you things that people have been saying for a while.
That's interesting. Yeah. And you can't lose perspective either. We've been through these markets up and down, back and forth. There's a couple of things that I was looking at before, and these were things that came across my desk in the last few weeks that I felt we do as a team, and I do personally, day by day. But there were some quotes that I wanted to share, and one was, "Don't try to change people, change how you interact with them," which I think is super important. Not just with clients, but with people in general, with team members, with different people respond to different things, and also friends, or family. If you would like certain aspects or qualities of someone, accept them for that, and different agents on our team and in general have different attributes. Everyone has downfalls and positives. Kind of, treat them as such. You can't really change people. And I oftentimes see agents arguing with a mortgage lender or someone else and constantly trying to change their way they're doing things. And that's the same with friendships and whatnot. And I really felt like that's something that I do without thinking about it. If
lost connection,
and that didn't work. Sorry about that. If I feel as though someone doesn't offer anything, then
right, they're not bringing anything to the table.
But oftentimes they do, but you take them for what that is. Right.
I think that's a great what you like a quote you read, or
it was don't try to change people, change how you interact with them.
Yeah, I think that's amazing, because we do experience that a lot in our team, and I'm guilty of it. I'll expect everybody to do the stuff the same way as maybe I'm doing, or agent B is doing it.
But sometimes that agent might have something else that they do very well,
right?
And you can take that piece and be like, oh man, I should do that better, right? Yeah. So there's different people have different positive attributes, is I guess the point that I took out of it. Yeah. And again, if someone does a behavior that is just unacceptable to me on a friendship or a business level, then I treat them like that. Then they're not going to be my friend, or I'm not going to do business with them. But oftentimes, more times than not, 90% of the time, maybe more, there's something positive there. And you just know what to expect, right?
That's a great point. Yeah. I think trying to expect everyone to do everything similar as myself or other agents, it's not realistic. But if they're doing things that are detrimental, then that's a different story. That you don't try to cater to that. You have to address that and see where that goes. But
so just a couple more. This is another good one. Channel energy from like a fear position to a positive. We had some stressful things go on over the long weekend with our team alone this weekend. Every day we face challenges, but my job, I feel one of my jobs as a team leader, is to take that stress and help the agent or the staff member manage that and remind them of the goal, the objective at hand, right? Let's channel all of this frustration, or you were irritated by this particular situation. What's the goal? Maybe the goal is to sell a property. Maybe the goal is to have 3 deals by the end of the month. Let's figure out how to get there. Let's channel that fear or that being upset, irritated, into a positive. I think that's extremely important. Yeah. Plus, easier said than done in the moment, but you can do it.
When you also have, someone that's a little hard on you, taking a step back and realizing what's the purpose of why is it, I was just listening to something on the way in, and this radio show host was talking to a producer who was with them 15 years ago, and now that person went on to be very successful, Emmys and all that. And he was talking to the new producer who's currently in the studio, and just saying, I know, so and so could be a pain in the ass, but all that is stuff that I'm the most appreciated for, because it made me, I understood the reason why that was happening. Like you in this industry, just like in broadcast industry, in our industry, you need performance. You made a deal, great. Where's the next one, right? It's unfortunate, but that's how you make your money, and that's how you become good at what you do is by keep moving forward, and it's on to the next.
Yeah, it's an aggressive, very competitive industry.
Yeah. So my point is, you have to take a step back. Just because the person says, good job, and then next minute it's where's this. The purpose is to help you grow and help.
Well, feeding into that one was another one that I heard, which is if you have zero expectations or very low expectations of someone, you're less likely to be disappointed, which is very true. You have to count on certain people, I believe, your core group. But if you're working, with another agent and you're just expecting them to do certain things that maybe you do or you feel they should do, I never do that. I never take that for granted. I'm always following up my files. And that's the way that I live my life too. I don't have expectations of really many people around me. I expect really nothing. And if something were to happen or occur, it's a bonus to me at that point. I'm like, oh, that's great. That's a positive. It's not a negative when they didn't do anything. I really find myself acting that way. And there is less disappointment. If you rely on everyone else around you to do everything that perhaps you should be doing, or perhaps your perception is you think they should be doing, that's just going to lead to disappointment constantly and frustration.
Exactly. That's another great point.
Then the last one, and I see this a lot, especially with realtors and other competitors, is they talk a lot and there's not as much action. And so I read this, but if someone keeps saying something, it usually isn't true, or perhaps they're trying to convince them of something, right? And maybe it's partially true and they're trying to convince them something. And so if, for example, if they're always pushing something, a narrative, or always, it's great, maybe it's not great, so oftentimes I find people that continue to say the same things over and over. I'm doing fantastic. I'm doing fantastic. If you're leveling up in life, whether that's in real estate, your career, your family, a lot of people that do that at the highest level of success that I've seen are very private with that. And then you just see action. You don't hear them talking about, I'm doing this, I bought this, I'm investing my money here. They're not saying that. You just see the end result of what they have been doing. I really believe that. I feel like there should be a lot more action and a lot less talk. If you're saying how ready you are for something, whether that's a competition, or how ready I am to take over as market share, or how ready I am to go into these listings, you could think that. I oftentimes think that, but I don't try to convince others of that. And I really think that's a really good point.
Yeah. To an extent, that's very true. I do believe you on that. I think the ones that you see boasting the most about it do it. They're either, to your point, they're not successful in it, and maybe they're just trying to make that perception. And then you have a lot of people like social media personalities, and that's how they make their business. So it's
perception's reality in there. That I agree. The social media has changed everything. I mean, more day-to-day life.
Yeah.
If you're trying to convince everyone around you of something, whatever that might be, and it's overkill. It's just continuous.
Yeah.
I just feel like, again, it's either not, like, why do they keep saying this? Either it's not true, or they don't believe it, so they're trying to convince you.
Sounds like the state of our media, actually.
So I just feel like, again, going back to action, which is what we always encourage our team. We've been doing great, but action is better. And, if you see X amount of units closed and X amount of revenue under our team, it speaks for itself. We don't really have to say much else. We can say our accolades, but we don't need to talk about day to day, kind of, what we're doing. We kind of put that protocol in place and take action.
That's right. So wanted to also touch up on this, because I read this, and this is actually from Zillow, where buyers, either first time or repeat, are looking for their financial advice. And this was, I don't know the level of accuracy on this, but it was it's a pretty extensive Zillow research. And so all buyers, 55% look to their real estate agent, realtor, or broker, and only 32% look to financial institution. That's amazing. That to me tells everybody.
Say it again. 55%.
55% of all buyers, all successful buyers, look to their real estate agent or broker, same thing, for financial advice.
So not necessarily real estate related.
Well, I mean, it doesn't specify. It said for financial advice, so they didn't specify whether it was.
I mean, but real estate's oftentimes your largest
yeah.
asset.
So I think that's the angle they were coming from. But even still, more so than their bank. So instead of going to their bank about where we at with the current rates, give me an idea of where the market is. It's almost always your real estate agent, and that should inform all agents to have the day-to-day knowledge that you need to have, because when you're interacting with your clients, they want the information from you. They're not necessarily looking at the lender. So, and sometimes we have weekly interactions with our lenders because we want that information that they have. They're studying the markets as well, and it's their bank or their mortgage brokers, and they know what programs they have. So obviously we want to get the information from them, but the reason that we meet with them constantly is so that we can have the information, and we can, I think one of our lenders often says, have enough information to be deadly, so that you can pass it along to them to get a further breakdown. I mean,
but I believe that, because oftentimes when I get on the phone with a client, they want reiteration, or why am I doing the right thing? And you can't just say, I think you're doing the right thing. Mm-hmm. I don't do that. I give them information that would provide them enough data to make the best decision for them. Mm-hmm. And I have oftentimes agents that pull me onto phone calls, and that's kind of where the conversation is leading, is should we do this? Should we not? Should we buy? Should we sell? Where are we going here? And you have to walk them through your perception of the market. They're looking to you because mm-hmm. you're involved in the trenches, so to speak, where we're seeing day-to-day market information and activity with buyers are working with sellers are working with lenders are working with. We can see that market trend. We can feel that market trend. So it would make sense that they would try to rely on us, at least to a certain extent, or at least want our opinion.
That's what it is. I think it's the opinion. Like you're basically the first line, and over half of the time, you're basically the first line of knowledge, of information. And so you better be well equipped to provide, you're not the expert, you're not a lender. We're licensed real estate agents, but know enough to know where we are today in today's market, in terms of financially, and your local market in terms of where the homes are, to give them the information that they want. They're seeking it from you. So and the other part, well, there was a bunch of different surveys, but the next one after that was the three most difficult aspects that a buyer is looking for. The top three were all lending related. So again, they're looking to you, and they're all lending related. So you don't have to be a mortgage broker, but you should definitely know.
And I think it's safe to say all of our agents know a lot more than the average consumer with regards to financing. But to your point originally, it's enough information to provide them and refer them over to the expert. Yeah. Here's what we're seeing. Here's where roughly the rates are. Here's the program that may best suit you, but you really need to speak to so-and-so with regards to the lending. He or she's going to be the expert that can help you from here.
It's also very helpful because some buyers kind of price themselves out or kind of limit themselves because they don't know what their other options. There's so many programs that we are privy to, that we're speaking with multiple lenders, that you can have a buyer who says, I have to wait. But they didn't know about this program here that actually they don't have to wait.
It seems like the programs are opening up constantly, and maybe some are closing, but there's a constant shift and offering of different types of programs. And so if you're not up to date with that, And different lenders, in fairness to the consumer, have different options.
They do. Yeah.
Some better than others, and some have a multitude. Some have very select. It's just you got to go with the right lender or speak with multiple lenders.
You're just not providing the right level of service. If they want to buy a house and now they're frustrated that they, because of XYZ, they can't. But if you know of other options available, hey, I know that there's this option possible. Let's see if you fit into that category. You may or may not. Some of them have financial qualifications, minimum, maximum incomes, where the home is located. But there are programs, and there's just abundance of them. Just have to ask the right questions or talk to the right agent.
Yeah, and if anyone has any questions with any of that, you can reach out to us anytime. I think that's more or less what we had for today. In summary, I guess the market is stabilized for the time being.
Yeah.
Inventory remains low. If inventory begins to climb, then that's when I think the more significant shifts will occur. And it's hard to forecast that at this point because inventory is just so low. It's going to be seasonal. It's going to depend on the rates. It's going to depend on which will ultimately affect inventory. But yeah, it's fairly stable for now.
Yeah, and how many buyers come out of the woodwork too? If we don't know. We don't know if rates,
because we saw the rates go up, and when they pop back down, what happened?
Yeah,
a ton of buyers came back out because now they can afford what they used to be able to afford, and it was very frustrating for a month or two, whatever it was at the time, where they got they could afford $800,000, and now they can afford $675,000, and now it's back to $775,000 or whatever the numbers were.
Yeah,
so that it was almost like a
seesaw.
Yeah. A little bit of a tease, and they got back.
By the time the rate comes back, the house that they wanted to get at this price now is at that price.
That's the other factor, right? So, but anyway, thank you for being here. And S. Braconi at Team Braconi at Vast Real Estate.
Mm-hmm. And then just subscribe to the YouTube channel. You get notifications and hit the like button.
We got a great guest coming up as well.
Yeah, next week we'll have another guest.
So, thank you so much.
All right, have a good day. Have a good week.